I'm Jim Jubak, and welcome to my YouTube video for Thursday, April 25th. I've got a new t-shirt. Whoa, did I get up and show it to you? It's Catzilla! Rawr! There's a really neat artist's shop, artist collective, makes great t-shirts and bags. So they're known as Gnostic Tower. It's Gnostic with a GN, as in GNU. They don't have a website that sells. They do have a website that you can look at their stuff. GNOSTIC Tower. Next time you're in Venice, I strongly urge you to take a walk down Calle Pantalone and find the shop. Great stuff, and by that time, they'll have something entirely different. Anyway, if you like this video, please subscribe to my YouTube channel. Give it a thumbs up. If you subscribe, which is free, you get a notification when we do our next one. We're doing about 3 a week, not always on the same day. If you subscribe, you get a notification in your email box of when the next one is, like this one. If you want more of my free stuff, you can go to my free site. That's jubakpicks.com. That's got 3 portfolios, 12 to 18 month dividend stocks, 5-year, and usually 1 or 2 posts a day. You can go to my paid site, that's jubakam.com, which has 6 portfolios. It includes those 3 portfolios plus a ETF portfolio and a volatility portfolio and a really long-term, more than 5-year out portfolio that I christened the millennial portfolio for millennials. And that's a subscription site. You can find links to those down below. Also, move this whole kit and caboodle to Venice, including me. And my wife and I have launched a Substack about our adventures in Italy. We've always had a goal of moving to Italy, and we finally did it. The kids have flown the coop. Bye! And so we've been in Venice since September. We started Substack. It's free. It's called We Moved to Italy. And you'll find a link to that down below. We'd love to have your comments and have you a reader. Just subscribe for free. Get into your email box, and sometimes it's fun. Sometimes you can ignore the whole thing. It's not crucial, which is what makes it fun. Okay. Today's topic. Now, if I can put that in bold letters, now I'm worried about stocks. Okay, what I remember from the dot-com bust was the extreme reluctance of analysts and investors to say, well, you know, I'm paying a lot for earnings that are relatively predictable, but I really don't think I want to pay for earnings that are kind of vaporous. And it turned out that the earnings were not just vaporous. In some cases, they were fraudulent. Hey, what's that? It's a little fraud among friends. I'm seeing not fraud, but vaporous earnings in the last couple of days. And the 2 companies that have drawn my attention on this are Tesla and Apple. Again, there's no fraud. I'm not alleging anything about that. I'm just talking about what the companies said and the investor reaction to it. Okay, so Tesla announced earnings after the market closed on the 23rd. And they were crappy, to put it mildly. They announced 45 cents a share when everybody was expecting them to announce 52. Remember, this is a company that's been sort of like specializing in bad news, so it's not like this comes as a shock. And revenue was down 50% year over year, and guidance was really nothing to, well, sticky. Because they basically said, hey, we're going to see lower volumes next year too. But the stock is up 9.5% as of noon on the day after. Why? Well, Elon Musk, who's a master of spinning things and talking about stuff that he wants to talk about as opposed to what everyone else wants to talk about, came out and said, "Hey, you know, yeah, we're not gonna pull back on our plans for full self-driving capacity, which is key to having a Robotaxi. So we're going to do that. We're going to move ahead on that." And we'll give you more news on that when we have our August 8th event. But we're also going to sort of re-emphasize our need, our plans for a $25,000 a year inexpensive car for that end of the market that the Chinese are gobbling up. And we're going to have that out. But that model, which we were talking about not doing at all or maybe delaying, now it looks like maybe sometime around the second half of 2024, maybe the first half of 2025. Although in the conference call, when Wall Street analysts tried to get him to be specific, he really shut down any attempt by any of his managers to put a date on this, so we don't have one. But anyway, the fact is that I was reading the Wall Street take on this, and basically what they said is, hey, Tesla is back in the market for making a cheap car. The company has reinvigorated itself and renewed that commitment, and robotaxis are kind of, they're still there, but we're not counting on that. It's the emphasis on the car. Now, the thing that's really interesting to me is that we're talking about a car that may or may not be on the market in 2024, 2025. This is a totally, at this point, these are totally imaginary revenues. You want to pay up for those? Fine, but that's what it is. The other part of the Tesla story that's a problem is that the full self-driving capacity, well, this doesn't yet exist. They couldn't put a robotaxi on the streets tomorrow. So there are people on Wall Street who say, well, we don't think that this is ever going to actually produce a full self-driving software. So again, you're paying for revenues that are vaporish. Now, I used to work for Microsoft, so I know all about vaporware and how you hammer it home. But the issue for you as an investor is how much do you want to spend for revenue that is sort of pretty predictable, even if it's a question of how long is NVIDIA going to be able to grow revenue at 80% a year? Not forever, obviously, but there's a difference between that, where we can argue over what the specifics are and what the timing of that is, from real products, when we've got a real product chain and a company that knows how to move things down the pipe to new models and announces them and they come out. There's that kind of revenue. And then there's the revenue that Tesla sort of dangled in front of investors and they bought. It's not the Tesla dangle that troubles me. It's the reaction to the dangle. It's the fact that the stock is up 10% on what amounts to spin. We can see it. The question is, why are we willing to pay for it? And if you think about that, the question that, in my mind, that really has something to do with the entire market is, well, we're so used to paying for spin, we're so used to stocks going up on spin, that paying for spin makes perfect sense. Now, I would argue that there's a lot of difference between paying for spin and paying for a stock like Meta Platforms, which is trading at a trailing 12-month PE of 33, expensive. But we know what Meta is producing, and we can look at it and sort of kick the tires and go, hey, this is going to work, it's not going to work, and decide whether to pay up for it. Microsoft, 36, almost 37 PE. But again, we know what the issues are to ask. We say, oh, how fast is Azure going to keep growing? Can it keep, we're seeing the growth rate come down as the project gets larger. Or NVIDIA. It's a horrendously high PE, 67.6 at the moment, trailing 12 months. But the thing is that we know what this PE is based on. It's based on the fact that NVIDIA is growing revenues at this unbelievable rate of 60% a year, 70% a year, 80% a year. We can say that won't go on forever, but we've got real concrete things that we can decide to pay up for or not to pay up for. And I would argue that with Tesla, investors are willing to pay up for something that's very, very intangible and very, very vaporish. Now, I wouldn't worry so much about this if it was just Tesla, but I saw a note out of Bank of America yesterday talking about Apple. And it said Apple is going to go up 36% in 2024, and in fact going to go up 36% really pretty soon because, hey, at the Worldwide Developers Conference in early June, the company is going to announce its plans for integrating AI into its next iPhone, and that iPhone will then models will come out in the fall, and we'll have another couple of months of announcements of what this is going to be and all the announcements of all those features. Analysts at Bank of America think that Apple is going to make an announcement. You're basically being asked to buy into Apple on the basis of speculation about what the company is going to announce. Not really speculation on the product, speculation on when the company is going to announce the product. Now, I think that Bank of America is right about what Apple's going to do, but I'm not willing to pay up for it at this point to the same PE level as I would if it was a real product and with a real date. And it concerns me that the market is willing to do this kind of speculative investing. It's not the signs of a healthy market. I'm not so much worried about the PE of 37 on Microsoft as I am about the willingness of the market to bid up a Tesla on the basis of, vapors. I understand why the companies did it. I don't really fault Tesla for saying it and announcing it. It's the market reaction to the news that really troubles me. And that's my take on the market for today. So thanks for watching. If you found this useful or enjoyable, you can subscribe to my YouTube channel. It gets you a notification when we're doing the next one. It's free. Those alerts go to your mailbox or your phone. You can subscribe to my free site. That's streetbackpicks.com. That is 3 portfolios, 12 to 18 month dividends, longer term, and that's free. 1 or 2 posts a day. You can subscribe to my GBack AM site that's got 6 portfolios, so we add some options plays with some ETFs, some really long-term plays, as well as more posts every day, sometimes as many as 5. I wouldn't count on that, say 3. You can find the links to all those down below, as well as a link to the Substack that my wife and I have launched called We Moved to Italy because we moved to Italy. So if you'd like to follow our adventures, we're here in Venice from September for another 2 or so weeks. So we're going to take a little visit back to New York. And then when we come back, our initial move is going to be to the slopes of Mount Etna. We're going to be in Sicily for the summer. At an elevation where the temperature shouldn't be too extreme, unless of course the volcano explodes. This is something I've always wanted to do. In fact, in my bucket list, there's a little box that says, live on the slopes of an active volcano, and I'm now going to be able to check that off in July. So anyway, if you'd like to follow our adventures, please subscribe for free. You'll get a notification when we put up the next one, usually about 1 or 2 a week. Love to have you travel along with us, comment upon occasion, or send us for your favorite restaurant. If you got a good restaurant in Palermo or Catania, let me know. Okay, thanks very much for watching.